You know, the way we all buy homes is changing, and a really interesting deal that just went down in the mortgage world gives us a huge clue as to why. It's a classic story of tech versus tradition, and believe me, it could absolutely impact your next big move.
So what's really going on here? What's driving these massive shifts? Is it just technology? Is it big money pouring in? Or is it something else entirely? Well, a recent acquisition gives us a pretty clear answer.
And here it is. The really fast-growing mortgage company Lower has just bought Acopia Home Loans. Now I know this might just sound like another boring business deal, but it's actually a perfect example of a much bigger trend that is really picking up steam.
Okay, so let's dive in and get to know the two companies at the heart of this whole thing. On one side, you've got this tech-fueled, venture-backed disruptor, and on the other, you have a well-respected regional powerhouse. Pretty different, right?
So first up, let's talk about Lower. These guys started back in 2014 and have grown incredibly fast. A big reason why? They're backed by major venture capital. We're talking big investor money that's betting on them to expand, and expand quickly. They're not just building a lending company. They're trying to create this whole tech-first ecosystem for homeowners. A huge piece of that puzzle was when they bought the real estate portal Movoto last year, which just blew up their national reach.
And then you've got Acopia Home Loans. Think of them as the total opposite. They are a super well-established lender with really deep roots, especially in the Southeast. With 14 branches and dozens of loan originators, the local experts who actually walk people through the mortgage process, their entire strength is built on personal relationships and a rock-solid regional reputation. $425 million. That is Acopia's annual loan production. So let's be really clear here. This is not a case of some giant swallowing a tiny fish. Lower is buying a seriously significant, successful business. And that number tells you everything about just how valuable Acopia's position in the market really is.
So when you put them side by side, the contrast is pretty stark, isn't it? Lower brings the high-tech platform and the huge national reach, while Acopia brings that boots-on-the-ground, relationship-based model. It's like putting together two completely different but perfectly fitting puzzle pieces.
So you have to ask, why did this deal even happen? What's the big idea that brought these two very different companies together? Well, it's about way more than just getting bigger. It's about getting better in a very, very specific way.
From Lower's point of view, the logic is crystal clear. As their co-founder Mike Baines puts it, Acopia's strong relationships are a key ingredient for their ultimate goal. And what is that goal? To build the leading home ownership platform. So they're not just buying a company, they're buying trust and a great reputation that's been built over years. And hey, this wasn't a one-way street. Acopia's president Joey Davidson made it really clear that the deal worked because they had a shared vision. For his team, joining up with Loward gives them the resources and the tech they need to compete on a much larger scale, all without having to give up their core values.
This whole thing really boils down to one simple word: synergy. It's that idea that 1 + 1 can equal 3. It's the belief that by combining Lower's tech and scale with Acopia's trusted relationships, this new company can do something that neither of them could have ever done on their own. It's all about becoming more than just the sum of their parts.
Okay, so let's zoom out for a second, because this acquisition isn't just some isolated event. Nope, it's actually part of a much larger trend that is completely reshaping the entire mortgage landscape as we speak.
I mean, just look at this timeline. It really tells the whole story of Lower's aggressive strategy, from getting founded in 2014 to snapping up a real estate portal in 2023 to this latest deal in 2024. This is not slow and steady growth, folks. This is a calculated, full-on sprint towards dominating the market.
So if you only take one thing away from this whole explainer, let it be this. This single deal is a perfect snapshot of the industry's future. We are seeing widespread consolidation where bigger players are absorbing smaller ones. They're using technology as their main tool to expand their reach, and it's all being fueled by venture capital cash that demands really, really fast results.
And just to prove this isn't a fluke, this move comes right after another big strategic play by Lower, a new marketing partnership with the major brokerage HomeSmart. See, it's all part of the same playbook: expand, integrate, and grow, grow, grow.
So, all of this leaves us with a really big question. As technology and big money continue to merge with these traditional relationship-based lenders, what is the experience of buying your next home actually going to feel like? Will it be better, faster, or just different? That, my friends, is the real story to watch. Thanks for tuning in.